essentially you've delivered everything you've promised. So this is this credibility here. So let's say you exit 2021 at $200 million run rate. There's a probability.
Okay. It's a probability. Yep.
Reasonable?
It's a reasonable probability, sure.
Okay, so 200 million, right? So really, that would be worth, based on peers, $3 billion. Market, right?
Based on an undervalued asset today, just $1 billion on its own. So yeah,
you'd have more shares out, but it could be still. I still see a path. I see really a path for this to be a $10 stock by the end of the year.
Look, the reality, Jack, is you're buying companies. Let's say you paid 5 to 10, depending on how these resource companies price and trade at. But even if you do, you're buying companies where, let's say, 5 million in EBITDA, 50 million in revenue, 60 million in revenue, and you're buying them for $50 million, right? What's the value to us? Well, for Skylight shareholders, that's worth 300 million to 600 million based on a 5 to 10x multiple, which is still cheaper compared to where the industry peers trade at. So with that level of growth in accretion, if we did nothing else but just acquired all day long, you can see how that growth starts to replicate at a very rapid pace. Now, in the organic growth in there, I think that's where you drive those multiples higher and you start to get that institutional support long term, which helps you get the higher comps, ultimately creating a better value overall in the share price. But just along the opportunities that exist with consolidation in the space and the level of fragmentation, this is like I said, right time, right place, and executing in the right market.